Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Monday, December 3rd, 2007, and the market's closed. S&P finished off down $1.25 or 0.84%. You can see that last week, as we saw, it did close above that 200-day moving average that we've been watching very closely, and a lot of people have, I'm sure, as well. But it looks like it's back below that for now. We've got a declining 20-day moving average, a declining 50-day moving average. And what I've been saying is that we've got a lot of indecision in this market, and I still think that's the case. On the S&P 500, it's not clear yet on the intraday time frames that the sellers have really taken back control. So some of the other markets are a little bit more damaged, but you saw that this little level of resistance last Thursday, it did seem to act as support late in the day here. We do still have a rising 5-day moving average in the S&P 500 as well, and we're comfortably above that. If we take a look at the average price paid since the holiday shortened day, the VWAP that is, you can see that it's comfortably below this market at $1.46. And if you look at it from the gap of a week ago, that seems to maybe be being a short-term level of support in here. So the gains from the 28th on, basically the market is unchanged since there. So I think tomorrow is going to be a very critical day for this market. The 146 level is going to be important on the downside if we test that, as that was important level of resistance back in here. And then of course we had that 145 that was also fairly important. So it's still possible, I think, that we could see on the S&P 500 this inverted head and shoulders pattern form and come to fruition. It's hard to believe when you look at how bad some of the selling was in other areas of the market today that this might happen. But again, I'm going to repeat what I've been stressing last week, is that you've got to keep your mind open to any scenario. It's easy to just take a look at one time frame, make your mind up and say, hey, that's it, I'm bearish. But these things, these markets do reverse. And as we saw last August, it was an inverted head and shoulders pattern that paved the way for higher prices as well. And there's the potential that maybe we're going to build another one in here. So let's just take it a couple of days at a time. But right now in the S&P 500, look for, I think, probably still we'll get a test of this 5-day moving average, and how the market acts in that area could give us a better idea of whether these other levels, 146 and 145, are going to hold. As far as resistance goes, if we get above 149, I think a lot of shorts will start to become very uncomfortable and might have to repurchase their positions. So we're kind of in no man's land here. If you look at the one-day chart, today's daily VWAP action, the market found resistance there late in the day and then sold off hard into the close, but it wasn't enough to bring it down to new lows for the day. So basically, the S&P was down 0.8%, but really not a whole lot happened in there as compared to, for instance, the semiconductors. Semiconductors, they're testing this 5-day moving average, and like I said on Friday, they probably need to clear back above 419 or so before we can think that the buyers have any chance of turning this thing around in the short term. So not there yet. I think that today's highs are going to be actually more important. So let's drop that down and say really the more important level for now is 418. If the semis can get back above that level, then maybe we'll get a short-term turn. We do still have a rising 5-day moving average, but just given the overall weakness in here, I don't think you put too much credence in that moving average. By the way, I've been experimenting on my blogs with various video programs that are a lot higher quality as far as the viewing experience than YouTube. And I know a lot of people view it at YouTube because they can view it full screen, but some of the ones I've been using do have a full screen button as well. So I'm not always going to upload to YouTube, and I'm not always going to upload it to any of them, because basically there's no incentive for me to choose one over the other. So I'm going to keep you guys guessing and make sure that you come look at my blog, because that's where I post other things, and that's where I benefit from any anything that you're interested in as far as advertising wise and that sort of thing. The IWM did come down to the level that I've been stressing is important here, and that level is 75.80. One more thing I wanted to mention, I'm sorry, about the videos, is I see some comments on some of the other programs as well. But honestly, I don't look at them. If you wish to leave a comment on anything that I put on the blog or in the videos, then you're going to have to do it at the blog. And I don't always answer them because I just don't always have the time or the interest. So that's just so you know the rules, I guess. But the IWM, this 75.80 level was the area. I said 75.80, really down to 75.50. We'll give it the benefit of the doubt. That's where we were expecting to see some support for this market. Right now, it's not apparent that that is ready to hold. It's not apparent that it's going to fail here either. So this market is at a very important juncture. A failure here, and particularly if it gets back below that 75 level, I think, again, sets up another test of this 73 to 73.5 level. And the more time support is tested, the more likely it is that it's going to break down and fail at that level. The 5-day moving average is still rising, so it's possible that this could be, just sucking some short sellers in here, getting back above this level here at about 77 or 76.80 rather. So up $1 from here if it can get it back above that, maybe break out, test that level, and then make a higher high. I think that's going to take some bears off guard too. So looking at the daily time frame, rally could still bring it up to that 50-day moving average, but it is declining. The 200-day moving average is declining. The 10 and 20-day moving averages are declining. You have to continue to be very defensive in this market. It's still just really a mess all over the place. And the NASDAQ 100, if we look at the Qs here, again, on Friday we looked at this level that had been resistance and acted as support a couple of times. Found selling there again on Friday. That level coincided also with the 50-day moving average. And also, if you take a look at, I guess I had these levels left over. If you take a look at, so let's say well, here we go. We've still got this drawn in from last week. The 61.8% retracement as well was what we were looking at last week. And you can see that here today is the market, no, that's not today, I'm sorry. But today the market did find a little bit of selling right around in this area at about 51.60. So that's going to be an important level. If the market can get above 51.60, then maybe you take the shorts off guard. We do have a rising 5-day moving average, so above 51.60 could get the market moving. But again, it's an area where it's not likely to really move in here. So the evidence is still not there to get aggressively short. I've been trading the short side, but again, I've been stressing that this is really a day trading environment, and especially on the short side. That's where the opportunities seem to be easiest. The path of least resistance seems to be lower in a lot of these stocks. We've been looking at Google, and before we take a look at Google, let's take a look at Research in Motion. Research in Motion kind of has been leading Google in a way, and this broke its little uptrend recently. Had more bad news today, or more bad reaction from the market, and now Google has broken this little uptrend line. It's broken below it's made a lower high and a lower low. We've got again, I pointed out the bearish divergence from the MACD. And this isn't even it, so let's just change that over to Google. The bearish divergence from the MACD here, and it's just looking again like we have to be very careful. This is where it really would represent a much bigger problem, is below 660 in shares of Google.